Patrick, I imagine this is probably the one thing that, for the moment, markets are really on tenterhook. Yeah. How's Jay Powell going to play it?
I think he's going to have to soften his stance a little bit from a mid-cycle adjustment to say we're actually doing very well domestically, but we're not a closed economy. We have to take into account factors that are exogenous to the U.S. economy. So basically the weakening global backdrop and exogenous, if you want to call it that, escalation of trade tensions.
But the market wanted him to be maybe much more dovish than he wants to. Is that how you interpret it?
I don't think he can get as dovish as the market's implying in the Fed fund futures right now. That would be too much of a capitulation, and it's not warranted. If you look at all the trailing measures, the U.S. economy is actually pretty much where you'd want it to be, but it isn't to be viewed in isolation, basically.
Why does the market want him to be much more dovish? I mean, is it for their own purpose, or is it because there's a risk?
There's a lot of cheerleaders, so everyone in equities wants them to be dovish because that's talking their books. If you're in bonds and you own bonds, you want them to be dovish. So market participants aren't thinking about the economy as a whole. They're thinking about what's going to work for my positions, what's going to make my asset class go up, and the more dovish you are, that raises all the boats, basically. So I think the market is got a one-sided view, which is risk assets, not even risk assets. Basically, safe havens do very well with the dovish Fed as well. So I think you're probably get a bit too much noise out of there. If you just think of the whole economy, I don't think where the market's pricing in, which is 67, 70 basis points cuts for the remainder of the year, is warranted unless we do have something falling off the cliff somewhere due to a trade war, due to a hard Brexit, those kind of things.
Okay, the biggest risk is that Jay Powell disappoint the markets and the dollar goes up, or is it that we have another kind of half-hearted message where you're unclear whether he's dovish or not?
If he comes out not dovish enough, you'll probably get more of an inversion because the Fed fund futures are pricing in all those cuts that may not materialize, and it's hard to see really the long end going up significantly on that as well if he does come out even remotely hawkish. So I think he's well aware of that. He's going to want to create a dovish tone in his message, but he can't be seen as capitulating totally, saying, actually, you're right, we're just going to do what the market's saying, which he can be criticized of a little bit over the last 9 months, is really reacting to markets, probably justifiably so on a lot of circumstances, but he's got the president and he's got markets, and he does seem to be following them a lot.